Rahul Shah also joins us on the show right now from Motilal Oswal Financial Services. Rahul, hi. Happy Dhanteras to you and all your loved ones. Thanks so much for joining us this morning.
Hi, good morning, and wish you a happy Dhanteras to you and all the viewers at the moment.
So, what are you doing about Dhanteras today? Buying gold and silver via the Blinkits and Zeptos of the world, or you're going to the traditional mom and pop shop?
So I think combination of both, and then I'll look at where the markets have been. I think definitely makes more sense shopping on the equity side rather than going to the traditional side. And so I feel that equities still remain. And I think with this correction and where the what we've seen in the steep correction in last 15 days to 20 days, and so offers a good value in individual stock specific approach from here. Rather than just looking at the index level. So I say what we feel that I think the stock specific should be the year from this 2081 and looks like continue to do well and enough select pockets and just to avoid fewer stocks which has moved up and which was irrational, but it was just markets were doing well, those stocks were doing well.
Right, Rahul, very good morning. This is Shail also joining in the conversation. Happy Dhanteras to you. And wanted to understand, if you have to be stock specific, then which are these stocks that you should watch out for? From which sectors do they belong?
So I think if we look at it, where this earnings season has been, I think two, three things to relate from it. One is obviously, the markets have been punishing the sectors which are underperforming. So I think where there is no growth, that is one thing is very clear that consumer as a pack, I think is a clear avoid in a near term. I think looking at the management's commentary, poor quarterly performance, and I think and hefty valuation. So maybe like just to give a perspective, 1-2% quarter on quarter growth with most of them trading at 50-55 times earnings. So I don't think so this can remain for a longer time, and the management's commentary has also been discouraging. So I think FMCG remains not to buy, and I think the sector which has done well and which has been cheap and it has not done well in terms of the returns, that is financials. So if I look at financials, the numbers have been pretty decent in most of the banks, large as well as the PSU banks. I think most of them have done reasonably well. So if I look at it, 15% credit growth, and most of the things there are less misses and more to the balance sheet side. So I think financials remains our top bets in this kind of a scenario. So what we like in there's a mix of large and small banks in terms of private and PSU. So I think HDFC and ICICI both reported a good numbers, and I think HDFC specifically has not given a specific return in last 2 years versus the Nifty where it has, and now risk versus reward is quite favorable. Obviously, ICICI Bank strong numbers for it. And thirdly, I think if I look at a few PSU baskets, whatever has been reported, so I think in mix of say, if I look at Canara Bank, likes of Canara Bank or like a Union Bank, both looks quite interesting with a reasonable valuations and I think where the stocks have corrected in last 3-4 months. So I think banking remains a clear winner. What we can identify and rest, I think here are the few pockets in a real estates, which again I think other than overall, if I look at Pan India and few select pockets like Bombay real estate, the numbers have been quite good. So if I look at Godrej's numbers, what they delivered, again a blockbuster quarter, and again I think the guidance have been pretty strong. So I think that's the story of the real estate sector continue to remain strong in next 1 year or so. So I think a few select stocks, and as I said that I think this would be more of a stock specific rather than entire markets at this time.
Okay, it's going to be very stock specific. So let's get stock specific and ask Naresh that question. And I would want the twin charts of HDFC Bank as well as ICICI Bank to come up, because that will tell you the kind of divergent moves that we have seen for the year so far. ICICI Bank has jumped up 30% already, while if you look at HDFC Bank, that stock is up just around 2.25%. Naresh, what's the view? Will the outperformance of ICICI Bank continue on the charts, or HDFC Bank is expected to catch up?
So a high possibility HDFC Bank catches up over the next 1 year because the stock has gone nowhere for the last 3 years now. So if we go back to say November 20 or say start of 2021, the stock was at 1650. And from that point of time, there has been zero return. Barely we are at 1700, 1750. We were at 1750 back in 2021, 2022, 2023. Multiple times 1700, 1800 has been a resistance. And generally, we see in the long term when a resistance gets knocked multiple times, it breaks out going forward. So in this case, over the next 1 year, HDFC Bank could do really well. And ICICI Bank has been a clear winner for the last 3 years. So if you were to go back to that same similar price point, it was at 700, 750 in 2021. The stock is at 1300. So that's the kind of outperformance ICICI has seen with HDFC. But this could change going forward in terms of outperformance. ICICI could do well, HDFC could do better, is the possibility.
Kunal, what's your view? If you had to pick HDFC versus ICICI or the other way around, which one would you pick?
See, short term wise, of course, ICICI Bank is one of the strongest name, but sooner or later HDFC Bank will play a catch up. So the stock has been range bound for quite some time over the last 2.5 odd years. We've seen the stock stuck at almost 1700 mark, 1550 as a base, and I think 1700, 1750 as a resistance broadly for HDFC Bank. And we've seen this behavior from large cap names, that they tend to remain sideways for a couple of years also at some point of time. But then when these stocks, they tend to break out, that's where they tend to catch up with the leaders of the sector in terms of price performance. So I believe that from here on, both the stocks should do well. But I think HDFC Bank could probably be a standout performer going forward. That's my anticipation, looking at the the longer term charts, and the prolonged consolidation the stock has already gone through.
All right, so that's the view coming in for HDFC Bank, ICICI Bank, and Rahul, you've mentioned that you are actually bullish on the financial space given the fact that they are the underperformance in the market. But what's your take coming in the auto pack? How are you viewing this particular sector, and between four-wheelers and two-wheelers, which side of the fence are you on?
So I think way auto stocks have done. I think the way auto stocks which have reported their numbers in near term, I think in below a little bit below the expectations what the street was estimating, and what we believe is I think what we've seen in last 2-3 years, the way the auto numbers have been, and I think relatively 2-3 things for auto companies. One is obviously the RM cost was low and which was benefiting for their margins. Second, that there was a chip shortage, and that has augured well for the sales and all this. Now what has happened is everything is in line, and I think the RM costs have gone higher. And if we look at the launches of most of them are not no new launches from the, at least for our four-wheeler space. So my sense, I think valuations looks okay now post corrections. So maybe there will be again a stock specific, as I said, where the play has been good. Something like play like say Mahindra and Mahindra. Obviously the stock had corrected, and obviously a strong earlier launches on the booking, so that will do well in a four-wheeler space. And something in a two-wheeler space post Bajaj Auto's number, I think we've seen some sell-off. So again, in that space, I think a Hero or something like a premium segment like an iShirt, what they support. So I think those again a stock specific would do well again in the auto player rather than an entire sector which did very well in last 6 months. Maybe it could be some breather from here.
It's going to be a year where specific stocks will have to be picked out rather than that rising tide phenomenon for the entire sector. But what's the case for Telecom, and how was the performance of Bharti Airtel yesterday? Somit is joining us to talk to us a bit more about that. Somit, a bit of a rejig when it comes to leadership as well, and what about the numbers?
Well, if you look at the second quarter numbers for Bharti Airtel, they're pretty much in line with what the street was estimating when it comes to the consolidated set of numbers. Revenue and EBITDA were high by around 8 to 11%. Margins came in at around 52.7%. But the net profit number, that was 14% lower on a sequential basis. But that is because of an exceptional loss of close to 854 crore rupees, which was on account of some Africa Forex adjustment, which led the net profit lower on a sequential basis. Now, if you look at the India mobile business, which is the key business for Bharti Airtel, there the revenues were up around 10%, EBITDA increased by 13%, subscriber base came in at close to 35.16 crore, a decline over the previous quarter, while the ARPU number was 10% higher on a sequential basis at 233 rupees. Now, this growth in the India mobile business was on the back of a tariff hike that we had seen, and this ARPU number of 233 for Bharti Airtel is now at a premium of nearly 20% when it comes to Reliance Jio. Apart from that, The home broadband business reported pretty much steady set of numbers on the back of strong subscriber addition. Enterprise business segment numbers are pretty much in line, while the DTH business segment numbers were quite muted on a sequential basis, and also when you compare with the analyst estimates. Now if you look at the customer churn, that was also minimal for Bharti Airtel, and this churn was on the back of the tariff hike that we had seen in the second quarter. Now the 4G and postpaid customer addition remained stable at around 2 to 3 odd %, while data consumption on Bharti Airtel's network continued to rise. Now its consolidated net debt was marginally higher on a sequential basis, but the most important announcement that came in from Bharti Airtel was a succession planning announcement, and they have said that Gopal Vittal will be elevated to the vice chairman role and will look at greater telecom responsibilities, while his position as CEO in Bharti Airtel will be taken over by Shashwat Sharma, who is currently the COO of the company, and this change will happen since Jan 2026. Now Shashwat Sharma has been part of Bharti Airtel since 2018 and currently is the Chief Operating Officer and will be elevated to CEO by Jan 2026. Now if you compare Bharti Airtel numbers with Jio numbers, Airtel has outperformed Jio largely on all fronts. Its revenue, EBITDA and ARPU growth were much higher than what Reliance Jio has reported, and the subscriber decline for Bharti Airtel was also on the much lower side. If you look at Bharti Airtel subscriber decline, it was just 0.8% on a sequential basis, while that of Jio was around 2.2%. However, the data traffic on Jio's network grew much faster at around 7.8%, while that on Airtel's network grew at just 2.8%.
Alright, thank you so much for that, Samit. Naresh, coming to you, how are you viewing the charts of Bharti Airtel as well as the Vodafone Idea? Because after the fundraise for Vodafone Idea, we started talking a lot about the company, but it has not actually performed that well when you talk about charts as well.
So Vodafone Idea has been a surprise in terms of the extent of correction. After the IPO, it made multiple attempts to go towards the 18 mark, then kept on holding to 16, and then it just flopped out over the last 1.5 to 2 months. And this creates a problem for the stock because this has been the problem area, and the way every time the stock has tried to make a recovery, if the business has taken and tried to make a recovery, it keeps to flop. So out here, there could be some bounce back given that the stock is down from 19 to 8. But structurally, it's been Bharti Airtel which has continued to do well all through the last, say, roughly 1 year. The stock was, say, 800 to 1,000 rupees a year and a half back. The stock is at 1,700 rupees. Even today, and the stock is just in line in the correction terms with the index, so it's not seen a larger correction. But for the short term, if it breaks below 1630, then the trend changes. Till that point of time, the trend remains positive.
I want to talk about some of the momentum, plays from yesterday and look at Interglobe Aviation. It was an 8% crack, no less, and came by on the back of heavy selling and volumes as well in the stock. So that said, 4,012 thereabouts is where it shut shop. It was, of course, a stark reaction to the earnings which came by, wherein the September quarter performance clearly did not stand well with the street. But Rahul, you think days like yesterday are actually opportunities to buy into Interglobe Aviation? I mean, because for all practical purposes, this is the biggest market share leader in the aviation space and perhaps the only listed play as well.
I agree with you. On days like this, I think if you have a longer term view, maybe forgetting 1 or 2 quarters here there, I think this gives an opportunity in a stocks like Interglobe Aviation to build it for a long term portfolio with a large market share and with operating with such a high base. With as good as if I look at it in a listed space, I don't think so any near competitors is there for them. And obviously, in terms of their base also, I think in terms of market share as well. So my sense, I think maybe you don't have to look at 1 quarter or so for companies like Interglobe Aviations. I think if you have a longer term view of 2-3 years, I think definitely such sell-offs gives opportunity to build it for a longer term view.
Kunal, do you sense further selling in Interglobe, or do you think yesterday with that 8% nosedive, the selling is quite done?
I think the major part of the selling seems to be quite done. The stock has come back towards a major support. So I think 4,200 to 4,300 apparently is a very strong support for Interglobe Aviation. In fact, in the first half of 2024, for I think the 3-month period or a 4-month period, the stock was stuck into a trading range where this range of 4,200, 4,300 acted as a major support as well as a fulcrum point for Interglobe Aviation charts. And from there, the stock catapulted towards 5,000 levels. So which means we could be looking at a retest of the base as well as a stabilization for the stock. So which means that after that 8%, 9% cut yesterday, I don't see any major correction to the stock price. There could be intraday corrections into the stock, but I think net we are looking at the stock stabilizing at this 43 to 4200 support.
Right, Naresh, let's talk about the PSU Bank Index. That was the top sectoral gainer in yesterday's trading session. But of late, the ride has not been that great when you talk about the PSU sector or PSU banks in particular. Do you think that this is start of something new, a start of new rally of all sorts for PSU banking space? Merits a relook?
Yeah, absolutely. Looks interesting for the fact that the numbers have come up for some of the PSU banks and the price action has been positive post the numbers. We've seen a decent enough correction across the whole PSU bank basket. And these names actually broke the 4th June election lows, and we've again flipped back above those levels. There has been a good 15 to 20% correction in the index itself, as well as in a lot of stocks, it's been a 15 to 25% correction. So post the numbers, price action has been interesting. And once SBI breaks out about 810, that would be a confirmation for the whole trend change. So watching out the names, something like a PNB has dropped from 140 levels to almost 9,500. So that looks interesting. So there are interesting pockets, Bank of Baroda and PNB, the two names which look interesting as of now.
Okay, that's that on the PSU side and what's looking interesting right now. But let's just take stock of what else is happening in the market. Of course, you'll see an earnings reaction for Bharti today. We are awaiting Maruti's numbers, so that's going to be an interesting play to talk about. And autos, in any case, has been quite the diverse sector, if you will, because we've been seeing some very stark reportage and very stark monthly sales data as well from within the auto pack. While two-wheelers continue to rule the roost, it's interesting to see whether passenger vehicles will actually see a comeback post the earnings season, or rather the festive season coupled with the earnings season or not, and whether the stagnancy would seems to be creeping in for the passenger vehicle segment, whether that's going to get undone or not. Kunal, on the charts, what's your own sense? Because clearly M&M has shown leadership within the PV space. Do you think Tata Motors can play catch up? Do you think it'll be Maruti which will win the race? What are the charts reading?
So there's a definite withdrawal of positions from the auto stocks when you look at this positioning over the last 2-3 months. This as an entire sector, because there was a point where Bajaj Auto as well as M&M, they were the sole outperformers from the auto pack, and that at a point where the likes of Tata Motors has already gone through more than a 20-25% correction. I think from 1150-70 mark towards 800-820 approximately the support for the stock over the near term. Maruti has been an underperformer. The stock tried to get into a breakout zone, but again the stock has caved into the corrective pressure and come back towards the 200-day moving average. Eicher Motors has been going through its own concern. So only two stocks which were going through a lot of price strength was M&M as well as Bajaj Auto. But it seems like that now we are seeing even these two stocks getting into a bit of a consolidative phase. So my sense is that the next 1 to 3 months we could be looking at the auto stocks as a sector, maybe as an overall space underperform a bit, but even with within this zone of underperformance, I would believe M&M and Bajaj Auto could be best suited for stronger outperforming returns vis-a-vis rest of the other stocks.
Right, so that's the view coming in on the auto pack. Rahul, let me ask you about the metal counters, and how is the metal sector looking to you, given the fact that you had the China stimulus as well, and they keep announcing every week something new. You also see that sort of an excitement on the metal counters as well. But what's your take? Do you think that this is a sustainable run for the space in the longer run?
So I think metals as a sector, I think if I look at, I think again, where the markets are corrected, their stocks are also corrected. But I feel that I think select pockets again will have a value and maybe have picked up as a basket to build it up. So I think steel remains one of the best bet in that. And so maybe what we like is GSW Steel in that pack. I think numbers were in line with what we were estimating, and I think the commentary was forward looking, I think. So I think GSW is one of the preferred bet, and maybe something like in a stocks like say in a PSU basket, NMDC, where again the valuations are quite compelling, and I think recent corrections augurs well, and I think looks like that I think steel will continue to do well. So in that pocket, that is one thing. Again, in the aluminum space, I think Hindalco looks quite interesting. The stock has done quite well in this entire year, and I feel that still there's a upside, and there's going to be reasonably upside in Hindalco as well from here. So I think select pockets from metals can do well from here.